Hello and welcome back to EduTube. I'm delighted that you've joined us once again as we continue our journey through the fascinating world of blockchain. Today, we're exploring a concept that is rapidly changing the way we think about money and finance, decentralized finance, or DeFi. This topic is not only important because it challenges the traditional ways banks and financial institutions operate, but it also opens up new opportunities for everyday people like you and me. By the end of this video, you'll understand what DeFi is, how it works in simple, everyday terms, and why it might just be the future of financial transactions. Understanding traditional finance versus DeFi. Before diving into DeFi, let's briefly consider the traditional financial system that most of us are familiar with. In our daily lives, we rely on banks for almost every financial need. Saving money, making payments, borrowing for a new car or home, and even investing for our future. Banks act as middlemen, controlling and processing all these transactions. While this system has worked for many years, it often comes with fees, limited accessibility, and sometimes long wait times. Now, imagine a world where you can do all these activities without the need for a central bank or intermediary. This is exactly what decentralized finance, or DeFi, promises. At its core, DeFi uses blockchain technology to create an open financial system where transactions happen directly between people. No banks, no lengthy paperwork, just a simple automated process managed by smart contracts. What is decentralized finance, DeFi? DeFi is essentially a modern twist on everyday financial transactions. Think about it like this. When you lend money to a friend or neighbor without needing to go through a bank, you're already practicing a form of decentralized finance. DeFi takes that basic idea and scales it up to a global level using digital technology. In traditional finance, every transaction must be approved and recorded by a centralized authority, usually a bank or another financial institution. In contrast, DeFi platforms operate on blockchain networks. A blockchain is like a digital ledger that is shared and maintained by everyone involved in the network, ensuring transparency and security. The magic of DeFi lies in its use of smart contracts. These are self-executing contracts where the terms of the agreement between buyer and seller are written directly into code. Once the conditions are met, the contract automatically executes the transaction. This process removes the need for middlemen, reduces costs, and speeds up the transaction process. How does DeFi work? A step-by-step explanation. Let's break down the process in simple terms. Imagine a notebook that everyone in your community can see and write in. Every time someone makes a transaction, it's recorded in this notebook. This is similar to how blockchain technology works, providing a transparent record of every transaction. Now picture if that notebook could automatically enforce agreements. For example, if you and a friend decide to split the cost of a pizza, a small program in that notebook could automatically record each person's contribution and even remind you to pay back later. In DeFi, smart contracts handle these rules without human intervention. In the traditional banking system, your money goes from your account to the bank and then to someone else's account. With DeFi, the money moves directly from one person to another through the blockchain. Think of it as handing cash directly to a friend rather than going through an ATM or bank teller. Suppose you have extra money sitting in your wallet. In a traditional bank, you might earn a small amount of interest. With DeFi, you can lend your money on a decentralized platform, and thanks to smart contracts, the process is automated, earning you potentially higher rewards. It's a bit like lending a neighbor some money and having a pre-agreed arrangement that rewards you for your trust and support. Daily life examples to illustrate. DeFi's bring these concepts closer to home with some everyday examples. Imagine a small group of friends who decide to create a rotating savings group. Every month, each person contributes a fixed amount into a common fund, and the total amount is given to one member on a rotating basis. In the traditional sense, you might rely on a trusted person to manage this fund. DeFi replaces that trusted person with a smart contract that automatically rotates the fund according to preset rules. This eliminates the risk of mismanagement and ensures that every member receives their turn fairly. Picture needing a little extra money to fix a household appliance. Instead of going to a bank, you could borrow directly from someone in your community through a DeFi platform. The terms, like the interest rate and repayment period, are agreed upon by the smart contract, much like signing a simple, transparent agreement with a friend. This direct lending is not only faster but often comes with lower fees because there's no bank taking a cut. Think about how you might save money in a piggy bank at home. While your piggy bank keeps your money safe, it doesn't grow over time like a bank account might with interest. DeFi takes this idea a step further. You can deposit your digital money into a DeFi savings account, and through automated processes, your funds can earn interest. It's as if your piggy bank could magically add a few extra coins each month without you doing any extra work. The advantages of DeFi. There are several clear advantages to using decentralized finance over traditional banking methods. DeFi platforms are open to anyone with an internet connection. You don't need a bank account or a high credit score. This inclusivity is especially valuable in parts of the world where traditional banking services are limited or hard to access. Traditional banks often require lengthy procedures and waiting periods to process transactions. With DeFi, transactions are executed automatically through smart contracts, making them faster and more efficient. By eliminating middlemen, DeFi can significantly reduce transaction fees. This means more of your money stays with you, whether you're sending, receiving, or lending funds. Every transaction on a DeFi platform is recorded on a public ledger, which means it's visible to everyone. This transparency builds trust because it minimizes the possibility of hidden fees or unexpected changes in terms. Risks and considerations. While DeFi is exciting and offers many benefits, it is important to approach it with a balanced view. Because DeFi is a relatively new technology, there are risks to be aware of. 1. Technical glitches. 2. Lack of central authority. 3. Market volatility. 4. The value of digital assets can fluctuate more wildly than traditional currencies. 4. While this can lead to opportunities for higher gains, it also means that there is a risk of significant losses. As you continue to follow our blockchain course here on EduTube, remember that every concept we explore builds on the last, paving the way for a deeper understanding of a future where financial freedom is accessible to all. Whether you're new to blockchain or looking to expand your knowledge, embracing DeFi can be your first step towards financial independence and innovation. Thank you for watching today's session on decentralized finance. I encourage you to leave your thoughts or questions in the comments below. If you found this video helpful, please like, share, and subscribe to EduTube for more engaging and easy-to-understand content on blockchain and beyond. Stay tuned for our next video as we dive even deeper into advanced blockchain topics. Until next time, keep exploring, stay curious, and enjoy the journey toward a smarter financial future.